Coming up on Market to Market, a new bill could wash out a pending lawsuit. February weather is anything but normal. And learning how to price an old commodity in a new market. Those stories and market analysis with Mark Gold next.
If you want to go out.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, February 24 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Mike Pearson is away this week. New jobs and pay raises have given Americans enough confidence to take the plunge on a new place to live. According to the Commerce Department, new home sales rose 3.7% in January, while existing home sales hit a 10-year high. These factors and solid growth among our economic indicators has the Federal Reserve saying key interest rates will be raised fairly soon. The fallout from a pending lawsuit could require U.S. grain farmers to get a water discharge permit. And this week, a flanking maneuver was made that could submarine the entire case. Josh Bittner has the details.
Iowa's capital city independent water utility, Des Moines Water Works, could be dismantled to give the metropolitan, outlying areas, and neighboring counties control if a new state bill becomes law.
Right now, you've got a water utility that provides to 500,000 people. 60% of those are outside of the Des Moines metro area. The end goal is to have a regional water authority where the ratepayers, their elected people, have a seat at the table.
Representative Jared Klein first introduced a regional control provision to an unsuccessful bill last year. Des Moines Water Works leadership say this year's attempt, House File 316, is an intrusion by state government into local oversight.
This is clearly a get-even bill that is trying to blow up our Board of Trustees and change who makes decisions about our litigation.
Waterworks awaits trial in June, having sued farm drainage districts in 3 counties upstream of its primary potable water resource over excess nitrates from agricultural production. The case could redefine clean water regulations for farmers nationwide, unless a shift in local control weakens their argument.
If anything, this legislation should remind people that we are not part of the city of Des Moines. We think the Des Moines City Council is far weaker in their resolution to deal with water quality issues and more inclined to compromise. So we think effectively this would kill our lawsuit.
The utility spent over $1 million last year operating one of the world's largest nitrate removal facilities. Waterworks officials have said the corrosive effect on aging infrastructure will cost at least $80 million to replace in the near future. But the state's proposal would have suburban ratepayers share in the expense. Proponents say the trade-off is equal representation.
You have a group of individuals appointed by the mayor that have no accountability to anybody else once they've been appointed.
Des Moines City Council member Christine Hensley also is a board member of the recently formed Iowa Partnership for Clean Water, which focuses on water quality education, collaboration, and conservation methods in contrast with Waterworks' legal methods. But after recent political sea change, local leaders have waded deeper into legal tides.
It appeared fairly obvious that there would be some legislation again this year, particularly after the election, and you now had a majority in both the House and the Senate. So yes, Des Moines was proactive.
Some opponents believe the bill stems from a false mandate, accusing farm lobbyists of pushing the effort. Groups like the Iowa Farm Bureau deny any involvement. Klein says he's joined by a bipartisan group of Iowa legislators who claim a conversation is long overdue, and lawmakers seek flexibility moving forward.
I have a timeline built into the bill that if this thing's falling apart a year from now, and I've got a couple of the outlying communities that come back and say, you know what, Representative, this isn't working. We need to go back. We can go back.
but costs and liability are currently a relative unknown. As the bill moves through the State House, some Central Iowans have vowed to dig in for a long campaign.
That's the deal they made with the legislature.
Kick us into the high weeds if you think you can, but the message of dirty water in this state and the role of agriculture in cleaning it up is not going to go away.
For Market to Market, I'm Josh Bittner.
So far in February, the National Weather Service recorded 4,400 record highs. This week, drastically warmer weather will likely assist in adding to the streak of 15 straight months of record warmth. John Torpy reports.
Weather patterns across the nation went a bit wonky this week as the West stayed wet. The South summoned severe storms, and the middle of the country enjoyed a bit of summer. Out west, a series of storms continued to douse the Golden State with torrential rains, causing evacuations in portions of Northern California thanks to swollen rivers and stressed levees. In the South, severe weather stomped on parts of the Lone Star State as a pair of tornadoes touched down in San Antonio, causing residential damage. And in the Midwest, Mother Nature pushed Old Man Winter to the side, blessing the normally frigid section of the country with several days of record-breaking summer-like temperatures. For Market to Market, I'm John Torpy.
Some archaeologists believe beer may have been the spark for cultivated agriculture, making the quest for a cold one more than 14,000 years old. The drink has evolved into a staple at many a sports gathering and family reunion. However, a trend in craft brewing has made the primary ingredient in this bubbly libation a growing market where price discovery is at a premium. Peter Tubbs has our cover story.
60 acres of trellised vines in Yakima County, Washington, are home to a key component of America's burgeoning craft beer business. The hops grown here add the bitter flavor in beer, that snap on the palate, which comes from the variety and volume of a primary ingredient used in the brewing process. For craft brewers like Nick Bowes of Rock Island, Illinois, the decision on how much of the indispensable spice to use in Bent River Brewing's newest offerings is a delicate balance.
So we have a fairly knowledgeable market, around here, and they want the breweries to, what's new, what's next. They want to see, every time they come in, they like to see a different beer that they can try.
For brewers, the customer-driven pursuit of hop flavor creates a price conundrum, finding the right hops at a profitable price. However, brewmasters often purchase the vital ingredient blind because the market lacks transparency. Part of the problem is the size of the market. While the industry generates $2 billion in sales each year, less than 100 growers produce the majority of American hops. With over 100 varieties in use, there are essentially 100 separate markets, each susceptible to price swings due to demand, weather, rumor, and fashion. Douglas McKinnon has worked in the hops industry since 2000.
We know roughly where the prices have been, and we know roughly what the market will bear. And so then you somehow in the middle there have to calculate your profit and then try to negotiate a good deal with the growers.
To avoid being caught in a scarce price environment, both brewers and merchants contract hop sales, often 3 to 5 years into the future. Farmers benefit by removing some of the variability in their incomes. Merchants have a destination for the hops they buy during harvest, and brewers get predictability in their production pricing.
We usually end up about third quarter every year trying to sell off some of our excess from our contract because, again, I'd rather be slightly over-contracted than just be unable to produce one of our core products.
The journey of hops from hop yard to beer glass has multiple steps. The hops must be separated from the vine, then sent to a kiln for 8 hours to be brought below 10% moisture. Then packaged in 200-pound bales for storage at 34 degrees until they can be either compressed into pellets or converted to an extract. Hop pellets, if properly stored, have a shelf life of up to 3 years. Canned extract is good for a decade or more. The multi-year shelf life of hops can actually make a spike-prone market more volatile. With no standardized inventory data, a bountiful harvest in one production year can depress the market for several years to come. Higher demand from the craft beer industry has boosted United States hop production 28% since 2000. As an affordable luxury, a young generation of beer drinkers has adopted craft beer over the mass market beer their fathers drank. This market shift has encouraged the installation of thousands of acres of hops in the Pacific Northwest, worrying some that a crash in hop prices may be on the horizon.
So what happens is the hop industry is never in balance. It never finds equilibrium. So it's always either oversupplied or undersupplied.
Craft brewing uses dramatically more hops than conventional brewing, and craft beer continues to carve market share away from national beer brands each year. Hop production is expanding to meet demand, with 8,300 acres added in 2016, the third consecutive year of double-digit percentage growth. The Gamache family has been farming hops in the Yakima Valley for 75 years.
So hopefully, by the time that you're harvesting your crop, you already know what you're going to get for it and where you're going to deliver it.
The arid Yakima Valley is an ideal growing region for hops, and the climate allows farmers to reconfigure their yards to meet changes in demand year to year. But the opacity of the hop market makes those moves risky without long forward contracts with merchants and breweries. The capital requirements of hops are immense. 10 acres of new hops can cost $500,000 to install and grow the first year, but can gross $12,000 per acre annually. And any plans to process hops require a minimum $2 million capital investment up front. This includes the separator and kiln required to prepare the hops for storage and eventual processing into a format brewers can use. High startup costs acting as a barrier to entry for prospective growers, coupled with the volatility of the hop market, has led to legacy operations with many on their third and fourth generation in the valley. The institutional knowledge is important to weather the lean years when hop prices collapse.
Guys that I'm drinking beers with, one day my grandfather probably drank beers with their grandfather. And
most operations are diversified across crops and calendar. Crews will pick hops, grapes, or apples, depending on what is ready that day.
I think we're going more in the direction of the English-style pub, where local is really important, but there's tons of room at the bottom of the scale, where you have a guy who's a brewer in their neighborhood, and they have 5,000-10,000 loyal customers. There's tons of room for that, and if that's the trend in the market, we could easily have 10 or 15,000 breweries in this country in the next few years.
From Market to Market, I'm Peter Tubbs.
Next, the Market to Market Report.
Despite a 4 million acre decline, USDA's Agricultural Outlook Forum gave corn the crown in this year's corn-soybean acreage battle. The news only served to keep the commodity market bulls at bay. For the holiday-shortened week, May wheat lost 7 cents and the nearby corn contract fell a nickel. The market factored in the first guesstimate of soybean acres, but South American pressure helped send the May contract down 19 cents. March meal lost $8.20 per ton. In the softs, May cotton gained $1.05 per hundredweight. Over in the dairy parlor, March Class 3 milk futures fell 62 cents. The livestock sector was mixed as the April cattle contract gained 2 cents. March feeders shed $2.38, and the April lean hog contract lost $2.75. In the currency markets, the U.S. dollar index gained 14 basis points. Crude oil added 21 cents per barrel. COMEX gold increased $19.20 per ounce, and the Goldman Sachs commodity index lost 1 point to finish the week at 401.8. Here now to lend us his insight on these and other trends is one of our regular market analysts, Mark Gold. Mark, welcome back.
Nice to be here, Paul. Thanks.
Before we get going, though, I got to let you know if you want to listen to our market discussion, you can do that anytime by downloading our market analysis podcast on our website of iptv.org/MTOM. So, Mark, you look at the Outlook Forum, hits the same time each year. It's not a report, say, like the WASDE report is, but it's very similar. Any surprises for you in that report this week?
Well, I don't know if there were surprises. I think a lot of us in the industry think the corn number is going to be less than what they came out with. There's some indication from what we see from fertilizer sales and seed sales that, corn just isn't going to have the kick it usually has. Now, that being said, if we get this early spring that we certainly look to be getting, with the exception of, this weekend, if guys can get corn on the ground, are they going to get corn on the ground? They most likely will. Corn is king. It always will be. Guys like to plant corn. And, can that change things here? The economics, and even the economics are shifting with the spring insurance levels at a dime higher than they were a year ago. Is that going to encourage a shift out of corn? Maybe not. But I think when guys look at the corn-bean ratio at 2.6, the bankers and the farmers are going to look at it and say, you know what, guys, we need some more beans.
We need also, the call was for less wheat, and it looks like the farmers in the wheat belt have responded. We're seeing less acres go, and the price reflected that a few weeks ago, but this week off almost 8 cents on that nearby contract. What's going on there?
A little surprising. I've kind of expected with the funds as short as they've been, that wheat would hold its own in here, and particularly with lower acres. The wheat had a really nice rally, 60 cent rally. And we backed off somewhat the last few days in the marketplace. But overall, I look at this wheat market as a market that's got some upside potential. You cannot put less and less acres in the ground with demand still picking up as it's been over the last several weeks, and expect that prices are going to stay toward these, relatively historic lows. We're not talking about $2 wheat from 15 years ago, but over in the last 5 years. So does the wheat have a chance here? I believe it does. We also have the weather. This weather is 107 degrees in Texas this week, to the snow up north and snow here in Iowa. Is this conducive to a great crop? The moisture's been helpful, but if we start getting into this freeze thaw, we can do some damage, and there's still some talk about some damage out there.
Well, 4,400 record highs, and clearly some of those are in Nebraska, South Dakota, North Dakota, where the snow cover has disappeared in some fields, and all of a sudden you've got wheat saying, it's time to grow.
Yeah, that's right.
That's problematic, and how's that for the long term then, on the deferred side?
We believe that we've seen a reduction in these world carryouts a slight bit here. The U.S. carryouts are coming down, less acres, better demand. So I don't know if prices are going to higher or lower from here, but we're certainly suggesting that if guys have got the 2016 crop sold, look at buying some call options here. Come out and buy a July call, which gets you through the end of June, in case we do have any significant weather problems. Demand picks up. If we lose more acres of wheat acres into beans, these July calls, in my opinion, could be some very valuable property out here. If you've got the crop in the ground now, we've had a good rally. We've made some sales on the higher levels in the last week or so. We still maintain some put option protection for the new crop. But certainly there's some upside potential here. We don't want to be too aggressive on our cash sales right now.
A little bit of sun for wheat. Corn, looking at 90 million acres to be planted. Market, not a great week for it, but the bottom didn't fall out.
No, and considering some of the news about Mexico going south looking for corn and setting up trade delegations to go down there, I think the corn acted, okay relative to the news, and with the fact that the funds were selling an awful lot of beans and meal here this week. So the corn kind of held its own. The exports were decent again. We're seeing good export demand. Ethanol demand's off just a little bit here. But the fact of the matter is, at 90 million acres, is it going to be 90? Is it going to be 89, 88? We don't know that yet. But again, we'd have the same type of advice on the corn. If you've got 16 corn sold, we would certainly re-own it, because there's a lot of time ahead of us in this corn market, and we're still at relatively cheap prices that can certainly move higher with any kind of weather glitches.
I mean, when you see it as warm as it is this early, and you see the drought that was in the southeast last year. Traditionally, that drought moves back up into the Corn Belt. That could scare the market up later on.
Well, you know, I'm not one to predict weather, so I'm going to try to avoid that. But I would say, you know, I've been trading over 43 years, long time. And usually when some bold statements are made about really anything, weather or disease, and people, it doesn't happen for whatever reason. It's usually the next year it hits. So could 17 be a drought year that we were everybody was looking for in 16? You know, it wouldn't surprise me at all. And when I see this kind of warm temperatures this early, can it sustain itself? Certainly can. And I believe that, you know, if this was, you know, with everybody as bearish as they are, or seemingly as bearish as they are, this could be the year where the funds get caught and we could see some higher prices.
So if you still have some in the bin, you might want to hold on to it right now.
Yeah, but I'd keep a put option underneath it in the meantime.
Soybeans, 88 million acres. They're the big winner in terms of acreage, and that's kind of what a lot of folks thought. Markets had a nice run up, but then if you look at the chart, that one you could call falling off the table, couldn't you?
Yeah, I would. We've had a hard break here, 50 cents in the last week or so. I think it's an indication that when you look at the Brazilian crop getting bigger and bigger by the day, the Argentinian crop not as bad as some people thought earlier, and maybe 3-4 million metric tons higher than the earlier estimates. We still have a lot of beans out here. And the Outlook report saying, you know, another 420 carryout. We got plenty of beans. You have to keep in mind, beans are still, or they were $1.50 higher than they were a year ago, with twice the carryouts out here. You know, frankly, it's been a mystery why the beans have been so strong relative to the carryouts. We know that we're going to see more acres. We know that people are going to be looking for beans elsewhere very soon. There's still potential trade issues with the Chinese, and the funds are still heavily long. I've been saying, when I was at Top Producer Conference, I mentioned that the number one thing I believed was that the American farmer, if they were putting in bean acres, needed to protect those beans right then and there with a put option and protect it. Because the real downside risk, in my opinion, is in the bean market more than any other for the time being.
Well, and maybe that's on the long-term side. Let's look at one of our Twitter questions where you can reach us each week at Market to Market or on Facebook at IPTV Market. This one comes from Dustin in Granger, Iowa, and he says, assuming the early spring like we talked about, Mark, will November beans have to continue to rally to buy acres? Because you know how farmers love to plant corn.
Well, I think there's a certain point to that. You know, as we know, the farmers do love to plant corn. If we get the early spring, they're going to be out there. They're not going to sit around and wait. They're going to plant whatever they can, and obviously corn's going in first. With the corn-bean ratio still pretty strong, you've got to think that from the economic standpoint, guys are going to have to take a close look at beans. Do they have to rally in order to buy those acres? We've already done it. We're at 2.5, 2.6 to 1 soybean corn ratio out here. So that in itself is enough. Now, if it really gets to be a great spring, could we see beans rally relative to the corn to hold those acres and to pick up acres? That's certainly possible.
All right, we got to move to the livestock side, which wasn't a bad week when it comes to the cattle. I mean, they end up barely just up 2 cents, but prior to today's close on Friday, it was a good run.
Yeah, it was a good run. The feeder cattle took a hit today before the report. The report came out exactly what the numbers were anticipated. Hard to say what the effect is going to be, but if you look at the charts, the feeder cattle look like they've got a problem. The cattle not so bad. Hogs look a little toppy in here. But on the cattle itself, we've got this big spread between the nearbys and the deferreds. We take a $10 hit between April to June, or excuse me, from February to April, and then April to June, another $10. So we've got a $20 spread from February to June. I'm not sure what's going to happen. Is the cash market going to start to come down, or are we going to see the futures move up toward the back? I think with the economy as strong as it is, and the demand for beef being as strong as it is, we can see some of these back months try to catch up here a little bit.
All right.
So I'm not bearish on the back months on the cattle.
On cattle, what about on feeders?
Well, on feeders, the charts really look bad after today. I would say we've kind of broken into the trend lines a little bit here. That gives me some indication that there's some real weakness out there. So that could be an issue. I would certainly, at these levels, because we don't have the spread differentials in the feeder cattle, I would certainly look to have puts on to protect those feeder cattle prices right now.
Yeah, that's a 2.3% drop, but really it's hogs. If you want to move to hogs here, Mark, now that's an almost 4% drop on the week, $275 down to $68. I mean, we had finally some positive, I wouldn't even say news, but just movement in that market that now has just evaporated. What happened?
Well, we keep getting up to this $80 level in the June and July hogs and the summer month hogs. I don't know how many times we pushed up against that resistance, haven't been able to close over it, and then right back down again. Again, the charts look very iffy. The inability to close over $80 when we had a good chance to do it is a little bit bearisher. So certainly we're recommending to guys with hogs, get some puts on. Don't let $78 hogs slip away and turn into $60 hogs 5 or 6 months from now.
And you're saying, man, I wish I would have sold just a little bit.
Well, you know, the hog market's a tough one to start trading, but certainly the puts are a great tool here.
All right, 30 seconds. The dollar. Again, one of those even weeks. Where's it headed?
Well, it's been fairly resilient. Every time we stick our head under even money par, we put it right back up. We were at 101 and change here this week. I think we closed right around 101 or maybe just under it. The dollar looks strong. The economy looks strong. It seems like the stock market likes the direction that President Trump is moving in, so I'd say relatively strong.
We'll see, Mark. All right, we'll continue that discussion in a moment. So, Mark Gold, thank you so very much.
Thank you.
Always good to have you here. That wraps up the broadcast portion of Market to Market, but Mark and I will keep the conversation going, including answering more of your questions during Market Plus, which is available on our website. While you're there, follow the links to our @MarketToMarket Twitter feed. Tweet us your questions and we'll get you the answers during our market analysis and plus segments. And don't forget to join us again next week when we see how carnivores process cancer news about some of their favorite dietary staples. So until then, thanks for watching. I'm Paul Yeager. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.